Welcome. Glad to be with you again. My name is Adeni Ajani. I'm a chartered financial modeler. I also have the FMVA certification. In this lesson, we'll be discussing how you can put debit and credit transaction in your pocket. That means how you can explain debit and credit like ABC. I know this is one of the major challenges faced by non-accounting professionals. What is debit, what is credit? Wow. Even some accounting professionals at times mix this debit and crediting up. But don't worry, in this video, I'm going to be explaining debit and credit in a very simple way that you can also explain it to anybody. Okay. I'm going to be using 4 boxes to explain the debit and credit transaction. 1, 2, 3, 4. Step 1, or the first thing I'm going to do, I'm going to divide these boxes vertically. So I'll have the right part and I'll have the left part. In account, the left part is DR, debit. The right part is CR, credit. Is a standard. The next thing I'm going to do, I'm going to divide those boxes horizontally so that I'll have the upper part and the lower part. Okay. Every company has a chart of accounts. I did a video on chart of account. You can please watch that video. But what's a chart of account? A chart of account is just a list of all the accounts that the company uses. The concept is the same, but the complexity may differ depending on how complex the company is. But every chart of accounts, on the upper part, you have the GL account. On the lower part, you have the PL account. Again, on the upper part, you have the GL account. On the lower part, you have the PL account. The next question is, what are the accounts under GL? And what is the account under PL? We have asset on the top level. We have liability and we have equity. On the PL account, we have expense and we have revenue. The third step is to place this account in the box they belong to. Asset goes to box 1. Anything asset goes to box 1. Liability goes to box 2. Equity goes to box 2. Expense goes to box 3. Revenue goes to box 4. Now, once you know this, you are 50% done. This concept will not change. Remember, we have placed the asset in box 1, liability in box 2, expense in 3, and revenue in 4. Let's start with box 1. Now, for every increase in assets, you have a DR. Once there's an increase in any asset account, you have a DR. If there's a decrease in assets, you have a CR. Please take note. And all you need to know is to know the position. Is it on the left side or is it on the right side? Remember, asset is on the left part. That is debit. So every time an asset increases, that transaction is a debit transaction. But when it decreases, it becomes a credit transaction. Now let's look at expense in the third box. Now expense anyhow will always increase. So that will naturally have a DR transaction. Let's go to box 2, liability. When the liability increases, remember is on the CR side. The increase in liability will give you a credit transaction, but a decrease in liability will give you a debit transaction. Please take note. Let's go to the fourth box, which is revenue. Now, anytime you make a sale, either service or goods, your revenue account will increase. But remember, because revenue account is on the CR side, so an increase in revenue gives you a CR, which is a credit transaction. Anyhow, it will always be a credit transaction. So that is how these accounts are placed to know whether it's a debit or is a credit. Okay, let's look at 2 examples before I wrap up this video. I would love you to subscribe to my channel, like this video, make a comment so that we can get your feedback and share it with somebody. Very soon we'll be launching our LMS. LMS is learning management system, where the 5 skills that I discussed, that's the accounting skill, the Excel skill, problem solving skills, data analytics, and presentation skills. We have an LMS where you can actually log in. It's not ready, but hopefully before the end of the month the LMS is going to be ready, where you can actually enjoy this course, the full course. The price is affordable. Okay, so let's look at these 2 examples. Let us look at this first example. When I deposited 20,000 into my bank account, I got a credit alert. Interesting. When I withdrew 10,000 from my bank account, I got a debit alert. Let me explain. The accounting from the banking side. Please take note. The accounting from the banking side. Whenever you open a savings account, a current account, or a fixed deposit account with the bank, that account with the bank is a liability account. Please take note. With the bank is a liability. Why is it a liability? Because the money you are giving them, the money you are saving, they are going to give it back to you when you want it. Okay. So when you go and deposit your money into the account, every deposit you do, the liability of the bank, remember the bank, is increasing. So in this case, the liability will increase by 20,000, and that is why the banking application will send you a credit alert. I'm sure we all like credit alerts. Take note. Your account with the bank is a liability to the bank. Now, but because of accounting principle again, for every credit, there must be an equal debit. So, but because you've given them that cash, their cash has gone up. So, what will happen is they will do a debit transaction to their cash because the cash has gone up. Now, you now go the next day to withdraw 10,000 naira. You know what has happened? Their liability has decreased. So what will you get? You will get a debit transaction of 10,000 naira. But their own cash too has also decreased. So they will credit their cash also with 10,000 naira. So that's the way it works. Just know that your account with the bank is a liability account. Take note of that. Let's look at the second example. You incurred an expense of 5,000 naira, dollars, euro, pounds, yen. It's the same concept. Whether you're in America, whether you're in Nigeria, whether you're in Japan, the same concept. Now, what has happened is that your expense has gone up. Remember, expense is on the left side. So, because it's on the left side and there's an increase, that's going to be a debit transaction. Anyhow, I said the expense is always a debit transaction, except maybe there's a reversal, but in most cases it's going to be a debit transaction because the expense will go up. Okay, now what's going to be the next account? Remember, for every debit there must be an equals credit. Now what's going to happen? Remember, you are not paying now. Assuming you are paying now is a different case, but in this case you are not paying now. So that means there's a liability that you must pay. So in this case, and remember, your liability is increasing, and whenever the liability increases, it's going to be a CR. So your liability will increase. So the 5,000 will come here. That's the concept. So let me do a quick recap. Remember, there are 4 boxes: 1, 2, 3, 4. Divide your box into left and right. The left is DR. The right is CR. Divide it again. You have the upper part and the lower part, GL and PL. You have assets, box 1. You have liability and equity, box 2. You have expense, box 3. And you have revenue. So once you understand this, you can explain debit and credit to everybody. Thank you very much. Like I said, I have a full course that takes care of the chart of account or everything accounting, and takes care of the other skills that you need to become a world-class financial modeler: the Excel skill, the accounting skill, the problem solving skill, the presentation skill, and the data analytics skill. So like I said, the LMS is not available at the moment, but before the end of the month the LMS will be available. So at this point, I want you to subscribe to this channel, like this video, share it, and let's add your comments so that you won't miss any of our program or any video. Once again, I want to say thank you. See you in my next video.